All right, what up? It's Ruben from TGE, and in today's video, I want to talk about trading psychology and consistency, and how to make this a reality. Because if you could do this, and you want similar returns like this, 72% year-to-date performance on a six-figure account, and you want to do similar stuff like this, you need to make sure that this is in check, okay? And if it's not in check, then you won't receive this. So if you want this, you're gonna want to watch this video. All right. So let's start this trading psychology video with going to the community, because 19 days ago, I asked my community member, which you can join for free. I asked them, what's your biggest struggle in trading? And a few people posted their answers here, their biggest struggles. So we're just going to go over these, and I'm just going to give a response. This is going to just off the top of my head, and then we'll go from there. All right. So Esther said, self-doubt is my biggest issue. Okay. And this can come in a couple forms, right? Because it could be, self-doubt usually happens when you start with a $10,000 account, or let's say, like, actually I've seen members have a $300,000 account, and then it drops down to $25,000. So this is going to create a lot of self-doubt, right? Because you may start from scratch. You may be trying to self-teach yourself, and all you're doing is just burning cash. Okay. I want to give you an example here of a student that I had who had self-doubt at some point. This is Sul. He's a TGE Max member, and he joined the coaching program. But before that, he tried to teach himself to day trade and swing trade. It didn't work out. He had a $10,000 account, and it dropped down to $1,700. And during that drawdown, symptoms like frustration, doing it by yourself, an emotional toll. He wanted to be a full-time trader, which was a dying dream, because he was going nowhere. Internal conflict, because he loves trading and he feels like he's going to have to give it up. So all of this creates self-doubt. And so he was in the same boat. Nonetheless, when he joined the program, we had to reset his thinking. We had to take it steps back. Okay. And in the result of doing all that in consistency, having that consistency in his trading psyche, he was able to achieve a six-figure account. Okay. Over the course of, 1.3 months. Okay. So, 1.3 years. Okay. So how did we do this? How do you stop self-doubt? Well, the first way to stop, how to stop. So let's write a checklist here. How to stop self-doubt. Or not how to stop, how to beat self-doubt. Okay, so first, when you have self-doubt, a lot of it has to do with because you just don't have a strategy. You don't know what you're doing, essentially. And what you need is a plan that you can follow day in and day out. And the better you get at executing that plan, the better you will be able to mold it into your own style. But first, you need to start somewhere. And so what I would say is, first, paper trade. Let's start here first. Find a strategy. Okay. A trading strategy. Find a trading strategy with a minimum of 1 to 3 RVR. So RVR just stands for risk versus reward. And that's what we focus on a lot inside the Telegram group and inside the TGE Max membership. It's that it's not about beating the market all the time. We don't care about being right all the time. We just care about when we're right, our losses are bigger than our losers. That's it. Okay. And to do so, you need to have a trading strategy that is 1 to 3 RVR. Okay. So what this means is, when we hit our targets and we follow our strategy, we can have about a 33% win rate and still come out break even, or coming out profitable, right? And that's exactly what you want to focus on. By focusing on this, you take away the mental stress about having to be right all the time, because that is stressful, and it adds a lot of anxiety to yourself. And I know this because I did this to myself, especially when I was day trading. Two, the second thing we did with Sewell, and that you could do as well too, is paper trade. 1 to 3 months. Now, this is really important because will get you to practice the strategy, but also it's stress free. You have nothing to worry about losing money or anything. And by refining your execution on the trading strategy, when to enter, when to exit, when to change your stop loss, when to take profit, when to do all these things, you will slowly start building confidence again, which will eventually beat your self-doubt. So paper trading is really, really important. And that's exactly what we did with Sewell for a couple months. I say, all you're going to do is paper trade the strategy, and that's it. And that's what he did. And at some point he came back to me and said, okay, Ruben, I feel really good about it. I want to go with a small account. And this happened after like 2 months of paper trading. So start here. When you have low self-esteem and you're doubting yourself on trading, start like this. Find a strategy that is 1 to 3 and paper trade. The other thing that would be a bonus, because paper trade you have let's say like you have unlimited cash, right? You could reset account to an amount that you have. If you have $100,000, reset account to actual value. So if you have an account of 6 figures, like $100,000, $300,000, reset to that. If you have an account of $50,000, reset to $50,000, and focus on small size. Okay, because once you're ready, once you're graduating from paper trade, you're going to take that same strategy, that same risk management, like position sizing, and you're going to transfer it to your real account. But you need to make sure that you're doing this to a T on paper trade. If you could do it with paper trade for 2 to 3 months, then you should be able to do it with your bigger account. Okay. The next thing that you want to do is and I'm going to say this again, even though I just wrote it, position sizing. 1 to 2% net lick. So net lick just means net liquid, like how much total account value you have. So not how much buying power you have, how much net liquid you got. So this is really important because I emphasize this a lot. In the market, we don't know what's going to happen. I don't know if price is going to go my direction. I don't know if we're going to have a crash. I don't know if the president is going to say something absurd and then crash the market. I have no idea. So the only way that we can protect ourselves is making sure that position size is in check. And because your position size will be in check, you won't have self-doubt about your trading psychology. You'll just be like, okay, like this is just part of the strategy, and I'm not going to burn my capital. I survive, because this whole game is about survival. And if you can't survive a month or two in the trading world, you won't be able to last 2 to 10 years on this, right? So it's about survival and sizing small. So paper trade, reset the account to actual value size, focus on small size, focus on position sizing. Okay. And I would say also, this will keep you small on your account, which is really, really good. And just, and if you're not sure about something, go back to paper trading. That's perfectly fine. There's a couple of times where Sewell actually didn't feel comfortable, and I told him, hey, if you don't feel comfortable on a trade and you don't understand it, don't take it. Just do it when it makes sense, okay? Because it doesn't make sense to be in a trade that you just don't understand. Everything about, which I guess is the next thing. No, only get in a trade when it makes sense. When it makes sense to you. Okay, that's the next thing. Because part of self-doubt is like not knowing why. If you don't know why you're in it, where is the stop loss? Where is the entry? Why are you in the trade? You're gonna be self-doubting yourself about this trade, because you won't be able to think clearly, and you won't be composed, and you might either sell too early or you may be holding a bad trade that's not even valid. So only get in trades that make sense. And that's, but again, whatever strategy you find, it has to follow your parameters. If it doesn't, avoid it. It doesn't matter. Okay. So that's how I would start to beat self doubt, so you can become more confident into going back into trading and all that stuff. Okay. So there's that. All right. Brandon Berryhill said, waiting to sell or gambling on random stocks. Okay. So a lot of this has to do with, if you don't know when to sell, it's because you just don't have an exit plan. Okay. And I'll give you an exit plan. Well, I'll tell you how I do the exit plan. You won't be able to replicate this because unless you're using the same software tool that I'm using. I've made a couple of videos on how to do this, what I'm about to tell you. Okay, so I'm going to show you a trade here. This is PDD. Okay, PDD, we're very long on PDD, and we're seeing a lot of calls here. Okay, this is a pro dashboard. One thing that I look for is price targets, realistic price targets. And what I do is that I like to figure out the monthly expected move for my short term. So I say, okay, the monthly expected move at the moment from as of right now is 127.63. Okay, and so you can see here that I marked it earlier, but it was 124. It's rising. Okay, so this is a trade that we're in. Okay, so when it hits my target 124, that's when I get out. That's pretty much it. But we also have some key levels here because Gacktron tells me where the biggest key levels are. You can see here, the taller the bar, the more resistance as price is going towards it. So I'm aware of, okay, this could be a potential big resistance. 120, 125 is small resistance, and then 130. So I may start selling some of my position here at 120, and then at 124, I'm practically out at this point. I may have some runners. Okay, so this is how I set my targets by the expected move, which I use from Gextron, and you should use too. I have a couple videos on how to do this, the DIY version. Actually, let me just show you here because I actually wrote it. It's part of this thing. DIY formula. Look for an expiration. Get the at the money ask call price plus the at the money ask put price. Add them together, and that's your range for that expiration. Okay. Gacktron is different. I've tweaked it for over a year now, so it's a lot more accurate, and it's designed to maximize my profits. So this is a small number. Gacktron gives me a bigger number that is realistic to hit, about a 70% hit rate. So you could use this DIY formula to figure out what price targets could be. And once it hits the price targets, you could just, you just sell. That's it. So this trade that I'm in, this is for before or after the earnings report, and I just try to hit this. That's it. And then I get out, and then I look for something else. Okay. For the gambling, most traders that I know that are gambling is because they're itching for a dopamine hit to just kind of get a quick buck. And honestly, this will never play out. This will never play out. You will lose in the long run. It would be a shame because trading can be a very wonderful high income skill. And if you're just doing it on gambling, if the likelihood of you doing this successfully over the long term is very low. So I would just kind of try and break away from this if you possibly can. One thing that you could do is kind of reflect on yourself and figure out like, why are you gambling your money? I think that's the quickest way to like kind of peel the layers off of gambling slowly. It might not happen in one hit, but like off of one reflection session. But you can figure out like maybe it's because of this. Usually, I've kind of found out like as you reflect more and more about whatever it is that you're doing, you'll figure out like reasons why you're doing or behaving the way you do. And this is almost like a self-conscious reason, like almost a subconscious, right? So you're doing this on autopilot mode. And so you need to reflect and then hyper reflect to kind of put that subconscious part into a different part of your brain. That way you're not gambling and you could break this as quickly as possible. And then you could turn this gambling thing that you do into a high income skill and make some real cash out of it. All right, so there's that. Carlos McDonald said technical analysis and charting. All right, I don't believe in technical analysis. I really believe that the edge in the market is by using the option Greeks, kind of like how I showed you. I believe in using the Greeks to your advantage for option selection, um, picking the right strike, having the highest odds, like the deltas can help you out with that. Picking contracts that can increase in value extremely fast. The gamma is there to help you out. And then also using the option Greeks to kind of figure out where support and resistance levels are for future projection pricing. It's not about what happened yesterday or a week ago or an hour ago or 5 minutes ago. It's about what's happening from here and into the future. And that's exactly what implied volatility does, which is not a Greek, but implied volatility works. It's forward looking in the sense of it. And then the option Greeks can help you with probability into the future. So I would focus on understanding the option Greeks at a surface level and then taking it to the next level of like how to like use them to trade and stuff to figure out future pricing. Okay. Another thing that I would use too is unusual options and see like what is the bigger money flow doing. So in this case, like there's a lot of 124 calls being purchased, 150 calls for PDD, 130, 125, 135 put. Okay, that's a put. 120 call here, 2 million premium. Stuff like this is what's going to help you figure things out as well too. Like what's possible. Like is it leaning towards the upside? Again, Gextron is my tool, and I love it. It's a wonderful tool. This is one of the best tools I've ever built in my life, and it does the job so well. So I'm biased. All right. All right. Kit said that emotions do get in the way, that he needs to treat it like a business and not take it personally. He's had wins and it feels great, and he's had losses and didn't get out when he should have, and it really bothers him. All the things you've mentioned come into play: fear, missing out, fear of losing, overconfidence. He gets caught up in an irrational exuberance. Former Fed, yeah. Okay. So again, the thing about fear of missing out, I tell this to all, like I get this all the time. Like, can we find a play? Sometimes we don't even trade inside the Telegram group. We don't even take trades. I don't take a trade all the time. I think there's like last week I only took like 1 or 2 trades, and then the rest of the week was just managing the positions. Because as I looked through my list, I just didn't see something that fit my requirements. And the thing is, like, I'm never going to be missing out on something because okay, I work with a vendor to get every single US optionable ticker that there is. There is over 6,000 US optionable tickers. So what that tells me is that there's always a move to be made every single day. There is a move. You just got to look for it. And it has to meet the criteria. Okay, so this thing about fear of missing out, it doesn't exist. Okay, there's always a move to be made, and if you spend the time looking, you will find it. Okay, so just think about that before you're like, oh, I'm gonna miss out. It's okay. Like, and there's always pullbacks. On average, there's about 2 pullbacks per year in the market, usually about 10 to 5%. And if we catch those 10%, those are good because then you can catch the upside for some huge upside potential every year. I've been doing this for over 5 years now, and there's always two corrections in the market at least. Overconfident. Okay, this one can get me too, but this comes into okay. So all of this, again, like I said before, you want to reflect. Okay, reflecting is really, really powerful. Overconfidence also leads to over leveraging, over risking too much, and so that is going to make you add more capital at risk, and then you either lose the profits you made or you're giving back all the profits and then some, right? And you don't want to do that. So after every trading session, reflect. Like what I like to do is I like to go on walks and then reflect on like what did I do right, what did I do wrong, how did that make me feel, um, do I want to do that again? Like these really stupid simple questions, but they truly like peel the layers back, and then it puts me into the why am I doing this? That's exactly what you want to find out, like why, and then figure out like does that make sense, right? If it doesn't make sense, then you just stop doing it. Or at least try your best, right? This doesn't happen off of one session. This will take a few sessions, but it will peel off. And the more you do it, the faster it is. The faster it is. So it's just uh, reflect for sure. All right, Jesse Eckel said, my biggest challenge is maintaining strict discipline during volatile markets, avoiding impulsive entries and exits to ensure my strategies edge play out over time. He said his biggest challenge is maintaining strict discipline during volatile markets. Okay, so here's the thing with volatile markets. And Gacktron is actually really good at figuring this out. When I go to this page right here on Gacktron, I'll go to the Gamma profile. So this is a page that we look at every now and then. Now let me see what's going on here. All right, whatever. And we have this gamma flip point. So this lets us know when does it become volatile. Okay. And so this gamma flip point is like the median of like above it is a stable market, below it is a volatile market. Like that last 5% correction that we had was pretty volatile. It was pretty aggressive and fast. And it was because we were below this gamma flip point. So with Gacktron, I'm able to forecast like I'm able to see like at what point below price will it get volatile. And once it does, then I switch my strategy to a short term. And again, one way to fight this thing of like maintaining discipline, like make sure you have your sizing in check. Okay, because if you don't, you're gonna destroy your account. Volatile markets can have massive upside movements and massive downside movements. That's what makes them volatile. The IV is increasing. And when it comes to avoiding impulsive entries and exits, it might just come back to what most traders face, which is like fear of missing out. And so you end up like taking trades that don't meet your criteria to ensure my strategy edge plays out over time. Yeah. So don't worry about missing a move. If you miss a move, that's okay. There's always tomorrow. Okay. There's always the next day. And another thing I always tell my teammates is like the market's always manipulated. So there's always going to be a move to be made. Don't worry about it. Yeah. Okay. So if we go back to this trading psychology page, so I would say this. Another thing that you could start doing as well too, I'm going to add here, is self-reflect. This one really helped me out a lot. Self-reflect after trading hours. And here are some questions that you can ask yourself, because essentially what you want to figure out is what is it that I'm doing? Why is it that I'm doing that? And when you figure out the why, you'll be able to kind of break those bad trading habits essentially. So some simple questions that I asked myself was like, what did I do good? What did I do good today? Here. And then I'll ask myself like, what did I do bad? What did I do bad? Right? And then how did that make me feel? Did I need to do that? Did I need to do that? Right? Like this is a good frame. This is a good template to start off with, and then you'll just go down the rabbit hole of keep asking yourself questions. And it could be because maybe you feel like you need to make money. Maybe it could feel like because you're not clear on an entry plan. It could be because maybe you don't understand the option grades, right? Like you'll figure out that why, and then just fix that why. That's it. And you do this time and time again, and this trading psychology will improve like tenfold, and you'll be essentially more consistent with what does consistency mean. Let me define that here. Consistency. Here, I'm actually gonna put this here, means this. Okay, here's what consistency means. Following entry criteria. Okay, following exit, I'm going to say profit-taking criteria. Following stop criteria. Okay, another good thing to do is like, if your price targets hit, it was part of the plan. It was part of the plan. Okay, and then also if your stop loss, if your stop loss hits, it was part of the plan. Okay, it's always part of the plan. So as long as you follow these criteria, okay, what else? Follow sizing plan. This has to be to a key, because if you have a 1 to 3 risk versus reward and your sizing is really off, it doesn't matter how good your win rate is. It doesn't matter how good your RVR is. You will blow up your account. I've seen it time and time again, and it's also happened to me before. Okay, this is what consistency in trading means. Follow the entry criteria, follow the profit-taking criteria, follow the stop criteria, follow the sizing plan, okay? And do not deviate. And when you're able to do that, then you could get these kind of results, okay? And if you ever think like, oh, like, don't ever get into your head like, I should have taken my money earlier, or I should have done this. I should, what is it? People say see green, take green. Like, that's not what you want to do, okay? Because you might cut your RVR. If the price target hits, it was part of the plan. If your stop loss hits, it was part of the plan. You do this over a long period of time, you will see these kind of results, and then you'll also be able to get Sul's kind of results, okay? That is how you stay consistent in trading and do that over time. And I promise you will see a huge improvement in your trading. All right, that's it for this video. I will see you in the next one. Peace.